afternoon. I'm Danie Laurel. The news day continues here on Businessworld Live. Now, the health department says it is taking lessons from past COVID surges in preparing for the probable entry of the Omicron variant. DOH Disease Prevention and Control Bureau Director Dr. Beverly Ho agrees with other experts that it's only a matter of time before Omicron reaches the Philippines. With this, she appeals for Filipinos to get their vaccines. Analysts believe that aside from boosting vaccinations, the government should also start tightening its border patrols. Moody's Analytics warns that although risks from the new variant remain unknown, it could still potentially cause outbreaks, which may again force the government to impose strict lockdowns. Meanwhile, today is the second day of the government's massive national vaccination drive. Yesterday, the government was able to deliver 2.5 million jabs. That's more than double the usual daily vaccinations. Vaccine czar Carlito Galvez estimates that by December 10, booster shots may be available for A4 and A5 category, which includes the general population. And possibly by January, vaccines will also be available for children ages 5 to 11. The local markets are closed today in observance of Andres Bonifacio Day, and we began the trading day, at least in the rest of the world, with some positivity. This morning, we were digesting news of U.S. President Joe Biden saying not to panic. We also discussed Pfizer CEO's comments on Bloomberg TV saying they're agile enough to have a new vaccine in 100 days. But there has been a wide-ranging sell-off of stocks, but particularly when you look at the S&P 500 futures, Euro stocks contract, Japan and Hong Kong indices as well. And it took only one headline for the markets to come crashing down in the afternoon session, and already seeing the future openings for tomorrow, or at least for later tonight in the US. And this is that the Moderna CEO had an interview with the Financial Times where he says that he sees the current vaccines are less effective on Omicron, specifically less effective at tackling Omicron than the earlier strains of COVID-19. He also said it may take months before pharmaceutical companies can manufacture these new variant-specific jabs at scale. This is the CEO of Moderna, Stefan Bancel, saying that to the Financial Times. Now, another thing that he mentioned was that scientists were worried because 32 of the 50 mutations in this variant are on the spike protein, which the current vaccines are focusing on to actually boost the body's immune system. Most experts had thought that such a highly mutated variant would not emerge for another 1 to 2 years. So he did mention that in 2 weeks, we will know, or data should be available on whether it causes severe diseases and giving a better indication of the performance of the existing vaccines. He did, however, say it will take several months before they could make an Omicron-specific vaccine. Recall that Pfizer said around 100 days. He says there should be a possibility to give more boosters to the elderly and compromised immune systems as we wait for these developments. Now, let's take a quick peek at currencies. I also wanted to check in on that. The Philippines actually flat performing today. There seems to have been quite a flight again to safe havens. Regional bonds were mixed, and South Korea actually held those gains together with Japanese yen. And, a lot of things going on here, but it's certainly possible that this is still just a knee-jerk reaction, and hopefully will be fading as more news comes out on the Omicron variant. Meanwhile, checking in on the other headlines, we're keeping our eyes on the country's major telco providers. PLDT and Globe say spectrum fees are becoming excessive. These spectrum user fees, or SUFs, are collected annually by the government from public telecommunications entities for compensation. Smart Communications describes these fees as unreasonable, saying that similar to last year, the company would most likely end 2021 with around 2.4 billion peso expenditure on SUFs. Globe, on the other hand, say these fees are set too high and could drive operators to invest less in their networks. This is why telcos are thanking lawmakers for passing House Bill 9851, or the Zero SUF for Telcos Using Wi-Fi Act, which seeks to adopt a license-free Zero SUF policy in line with, quote, best international practices. Globe expects this policy will increase public access to Wi Fi technology and eventually lower the cost of telecom services for the public. The proposed Zero SUF Act was transmitted to the Senate on September 22. Now, the government was able to raise some 360 billion pesos through its offer of 5.5 year Treasury bonds that ended Friday of last week. The Treasury says over 330 billion pesos of the total amount raised was fresh funding or new money, while the remaining 29.5 billion pesos was from the bond exchange program. This marks the Treasury's second RTB offering this year after raising 463 billion pesos from 3-year retail papers in February. The BTR said proceeds from the issuance will be used to fund pandemic response initiatives and economic recovery programs. The RTBs fetched a coupon rate of 4.625%. They will be issued on December 2nd and will mature in 2027. Now, the Bangko Sentral says inflation for this month is likely to come in within target, citing a tempered rise in consumer prices due to a stronger peso and oil price reductions. BSP Governor Ben Diokno said consumer prices would probably increase by 3.3% to 4.1% for November. This estimate is much lower than the 4.6% inflation print last month and possibly within the BSP's 2 to 4% target. Now, during the last Monetary Board meeting, the Bangko Sentral revised its average inflation forecast for the year to 4.3%. That's from 4.4%. Diokno said price rollbacks and a stronger peso during the month might have slowed the price increases. The Philippine Statistics Authority will report November inflation data on December 7th. Now, is the market reaction today the preamble to real economy risks? Here to help us figure things out, we have with us Carlo Asuncion, Chief Economist of UnionBank. Hi, Carlo, and welcome back.
Hi. Thanks for having me.
Okay, Carlo, not such a great day. We were already in such a positive spirit, and of course, all these risks are back, not just on the table, but really imminent already. Let's kick off with how worried are you, given that, of course, we've seen this already happen in Delta. We've seen the response of the government. Is it actually, less worrisome than people seem to think it is at this moment?
Well, to tell you frankly, not trying to be worried, actually. Not trying to be worried because, because I think that one thing good going for us that we have experienced it already. We have experienced the Delta. I mean, we experienced March 2020. So I think we have so much learnings already from there that we can actually use right now to buoy us over this new threat. No, I'm not saying it's going to be easy with all these things, and there's so much unknown at this point. So relative to, and we're trying to look at it at relative to the Delta variant at this point, but of course we're still waiting how this one will pan out at this point.
Well, that's what we can do, diba? We can only compare it to the response that we had in Delta. And can you say that we should be doing the same sort of response? Agapan agad, do another lockdown as we did in Delta? Or is the economy in a different stage right now where we're supposed to be living with whatever variant comes our way? We cannot afford more lockdowns. We were thinking that, regardless of these waves, we would not be reverting back to those ECQ levels.
One thing that was I would say good last quarter was that we did have a preemptive lockdown. Remember last August, and we've seen growth at 7.1 even.
Mm.
So it seems like at that point, you know, having such a preemptive measure can actually help the economy. And if we play our cards right, and when push comes to shove with this Omicron and variant, then we have to do what we have to do that has worked. No, so but of course. At this point, when people are all out and spending is up, and somehow there is some recovery that's happening, a lockdown is the last thing that you want to do. No, it's the last thing that you want to do.
When we look at that more than 7% growth in the third quarter, despite these lockdowns, much higher than any economist had predicted, what was the driving force behind that? And do we still see that driving force continuing right now if we do resort back to these lockdowns?
Yeah, well, I was also thinking how that happened, no? Because we were our forecast then was way below the 7.1. We were at, I think, 4.6, because although initially with our semi real time forecasting tool, it was at 6.7%, and then because of that lockdown, we were trying to include it, no, and but unfortunately, it did defy all our forecasting tools, even with a lot of just talking about it and weighing the pros and cons and all of those things. No, but yeah, I think it's just that really people just wanted to go out. I think at that point in time, no? People just wanted to do something outside of what we're doing for almost 2 years. No, and and one of those things probably is just really being out there and not really spending, but just really being out there. But eventually, when you're out there, you're forced to spend and and buy something or do something that needs to that need you to spend. No? So I think it's that's moving people to, at least during that time in the third quarter, that has worked. But I think for fourth quarter, it's pretty obvious that we're already in November, and seemingly people are, I've been checking some hotels in La Union, and practically in one of the apps that I'm looking at, it's already like sold out for December, mid-December. What? I said, wow, well, really people are, are going out, and I know now with this Omicron threat, just this past 5 days, so I don't know what's going to be the
Mm.
impact.
Okay, but given the fact that we're tomorrow it's December 1 already, and so we're mostly three-fourths way for the fourth quarter. Can you say that at least as of now, whether or not the lockdown occurs, that we've already managed to reach the 4 to 5% GDP target of the government?
Yeah, well, we are actually forecasting a 5.2 for 2021. So that's about
Assuming
a five,
we keep
yeah,
open. Hmm.
yeah,
Okay.
a 5.5 for this quarter. No, so that's very robust and very strong. No, and we might actually be seeing a higher print than that. No, we might be surprised. No, with the way that traffic is back, the movement is up. We've seen that in the mobility of Google. It's all trending up. So um, we do expect it, that we actually might even be landing above the target of 4 to 5%.
Mhm. Some analysts I've spoken to have said na okay lang daw to do the travel bans because these sectors have actually not even had the chance to recover, and we've actually been dependent on the domestic market and consumption, and not from foreign tourism and not even from foreign investments that much, diba, during this period. Do you agree with that? And is it okay for the economy to grow in this way, keeping domestic, closing our borders? How important are these sectors to our growth and recovery?
Yeah, I think at this point, Danny, we don't have really a choice with the way things are going on or developing. No? Yeah, we've been opening, and more people have been vaccinated, and even the restrictions are a lot lighter. You know, but with this Omicron, of course, if it pans out, and we realize that it's really super. It's what do you call this? It's contagiousness is really high, so more than even the Delta variant. Then we have to adjust to that, and we really don't have a choice but to make sure that the domestic economy supports the economy at this point. So and doing all of the respective restrictions, no, that would allow the domestic economy to still move and uh, support itself, no, at this point, no?
Okay, and last question, Carlo. Are you worried about inflation? Now the oil prices have dropped because of all of these, imminent lockdowns, possibly lower economic consumption. But at the same time, the lockdowns seem to have produced higher inflation as well, particularly in food. These sort of
Yeah.
things. What would be your? Do you have a new idea of how the inflation might be going, and whether that will be more worrisome because of this Omicron issue?
I was looking at that. I was trying to read up on it, and we are actually looking at November at 3.8. So that's already
Okay,
uh, within what do you call
target.
this, the target, and even lower in December. If things supposedly with no Omicron happening, no, if it does happen, and we expect what the worst, no. So, but if eventually we see that even the scientists admit that, find out that this is going to be really very contagious, then it's the first part of the pandemic when there was a lockdown. It was deflationary.
Mm,
We've seen that a lot of the inflation was actually very low, but with this time, I think that at the point of where the economy is, demand is rising a bit,
mm-hmm,
and because of the unevenness
mm-hmm,
of things happening in different countries, no, and even just the supply chain still, well, they say that it's easing, but still at this point there are bottlenecks that are happening. So I think this time is going to be inflationary versus a deflationary one. So we do, at least my 2 cents worth is that, we would be expecting a upward pressure to
mm,
inflation if indeed this Omicron thing or variant really becomes what it is, as
mm.
the scientists say. No?
Okay, thank you so much for those insights. That was Carlo Asuncion, Chief Economist of Union Bank. And those are the biggest stories from the corporate and economic front. That's today, November 30th, 2021. Catch Business World Live again. That's tomorrow, 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.